Welcome to ShortView Trading. This is your morning market hit for Monday, 26th of July. What matters today and this week for traders? Well, after a mini wobble in risk early this month, a number of asset prices made a pretty strong recovery last week, particularly the tech-heavy parts of the equity market. This chart shows an equally weighted basket of the key tech stocks in the US, which made new highs on Friday. They account for increasingly large share of the global equity market index. And on Friday, that helped push the Nasdaq and the S&P to new record highs. And elsewhere, other prices recovered well. Oil in particular rallied again on Friday. It's fully retraced its losses from Monday last week. The copper price has also picked up and is now above its key technical level, while Bitcoin has been particularly strong over the weekend and overnight. It's up about 25% from its lows last week on news that Amazon is lining it up as a payment option. So risk assets have been reasonably strong, and as I was highlighting on Friday last week, we've had a number of buy signals, clear, strong buy messages from our short-term models, which pick the turning point in equities and other risk asset prices reasonably well. You can see, for example, on your screen now, this is our technical model for the S&P 500. It generated a buy signal on the day of the low of the S&P last week. Equally, models like this one, which measures downside hedging in portfolios, has recently generated a clear, strong buy signal for equities. So the signals from our models have been timely. A week ago they were on buy. Over the course of the past week, equities and other risk assets have squeezed higher. The key question, of course, is do they keep moving up, or does the momentum fade and do they begin to roll over? We address all of that in our daily trading publication. In it, we make a 1 to 2 week recommendation, long or short, on US equity futures. It's on our website, available to subscribers. We also offer a free trial for 7 trading days. If you're interested, click on the link below. You just have to enter your name and email address. No credit card details required. And really, it's models like this one I'm showing you on your screen now that give us an edge as we make these calls. This is our short-term risk appetite scoring system. You can see it's been reasonably well correlated with equity markets over recent weeks and months. So what are we watching this week? Well, it's a big earnings week. We get the 5 largest S&P 500 companies reporting. Apple, Amazon, Google, Facebook, Microsoft. Together they make up about 25% of the S&P 500 index. We also get the Fed. Their 2-day meeting starts tomorrow, ends on Wednesday. 7 p.m. London time, we get the statement on Wednesday evening. 7:30 is the press conference. The focus, of course, will be on the timing of tapering. We think the timetable for that will probably be announced at the late August Economic Symposium at Jackson Hole. But any flavour on, any hints on the timing of that, of course, on Wednesday will be watched closely. In terms of data, it's GDP week, so we get the first Q2 GDP estimates for a number of major economies, not least the US on Thursday, a number of other European countries as well. Elsewhere, out of the US, we get durable goods orders. There's also some housing data. That was your morning market hit. Do follow us on YouTube, search under ShortView Trading. Join us on Twitter, LinkedIn, and or Facebook. Thanks for listening.